Hello, everybody. This is a question and answer session. Ask me almost anything on Tuesday, August 17th. Had a bit of a jittery market the last couple of days. I'm going to go over a couple of charts and then take some questions. Let's start with the MA stocks in Berkshire Hathaway. So I've updated most of the plug and play charts now. I'll finish that tomorrow morning and have that posted. And what we can see is that this 1.618 line here is one that we set up quite a long time ago. And now the price of Microsoft is getting there. So back in here, I was calling it a beast. Look where it got to. So the 1.618 line is pretty much a target level. And we can see down here on the weekly chart, Microsoft is overbought for RSI, MFI, and you can't quite see this maybe, but taken money flow is just starting to turn over. Everything is kind of at maximum levels. And I wrote an article yesterday, the new global trends report, where I do a bit of a risk review of the broader market. And what we see is that valuations, depending on which level you use, which measurement you use, the stock market is at record valuations or second only to 2000. The average is the highest ever. So the market's very expensive against earnings. And if money gets a little tighter, that means earnings are going to flatten out or go down. This is my monthly SPY chart. It was monthly. We are in a straight up period. This is where it really jumps out at you. On the monthly chart, RSI is way overbought. What happened here? End of 2007, we got 2008. Here, we ended up getting the market going sideways for 2 years. 2018, we had big correction, rebound, big correction, rebound, big correction. Go back to 2000, you saw that it peaked just before that, then it fell off. So the fact that it's here doesn't mean that it has to fall immediately. It could take a number of months. This one just should be screaming at you. This is volume weighted. That means that it's measuring essentially the money going into the market. This is all funny money. The economy is not producing any more than it was 2 years ago. So where is all this money coming from? The Federal Reserve. We know that it's the Federal Reserve from this. When they started to flatten, market went flat. Then we got lucky and got cheap oil and tax breaks. So cheap oil and tax breaks juiced it. They started to actually pull money out of the Federal Reserve. Market got choppy again and had a big correction. They started QE again when the repo markets threatened to basically explode or implode. So Shooter sees the same sort of targets that I do. 350-ish, but it could extend all the way down to under 300 on the S&P 500. Of course, we're at like 44.50 or something right now. So when you take a look at some of the stocks, you start asking yourself the question, well, these 5 stocks that I'm showing you are basically 20% of the market or 25% of the market. It's a big hunk, just these 5 stocks. What happens if Microsoft can't just keep going to the moon? What happens if Google, which is on an epic rally, especially for Google, because they haven't done anything in years, Google comes back to earth? You know, we already know that the small caps are getting beat up. Remember back earlier this year, I said, I wonder if we're getting close to peak Amazon. I don't know. Kind of looks like it, doesn't it? I could see it coming down pretty hard. You get Apple, king. It keeps chugging along. It looks like it's getting harder to do. Just went through a target range. Is it going to go all the way up here to 180? Or this minor resistance? Is that going to turn it back? Buffett sold a couple shares. Again, Buffett, Berkshire Hathaway. This is just so not like them. I'm not saying that it is a bad move. I'm just saying that all these moves are fueled by that Fed money. We shot up past the point that we really needed to shoot past. Everything from here, that is gravy. And I'm not so sure if it's good gravy. So if this Fed starts tightening up, and I'm listening to a webinar, a podcast that I got invited to through Market Watch because I'm a subscriber to one of their services. Listen to Fed President Bullard on Wednesday. And what he's saying is that they would like to not be doing any QE by March. That's what he's saying. And he's always been kind of a hawk. Maybe he's from Texas, I can't remember. Can you imagine if they got rid of all the QE by March that fast? Yeah, I think that'd be pretty devastating. I can't see it happening. But the fact that they're talking about it means they're at least trying to talk the market down. So I think there's going to be some tapering. I think it's going to be soon, next few months. They're going to make that very clear at the next meeting. And from that point, we'll see how the markets digest it. So I started doing some of the plug and play stocks. And just going to start with Amidas. I'm going to be interviewing the CEO of this company. And it's closing in on my bottom fishing price. These are the big carbon capture guys. First mover advantage, biggest market in America, California, 13th biggest economy in the world. They just got approval for a whole bunch of different things. They're building pipelines, they're building facilities. This is going to be a massive cash generating operation. So they're going to capture the carbon and they're going to segregate it, sequester it, process some of it into fuels, which is, I don't know that it's a huge deal, but I think that the sequestration is a big deal. So I'm going to have these all done tomorrow. Found out today that Discovery is Michael Burry's biggest holding. Who's Michael Burry? Anybody remember? The Big Short. One of the guys who made a lot of money on the financial crisis. And look at how this is trending sideways. And I put the yellow line down here just to be equal to that. You know, it's not saying that it can't go down to 20. But content creation is pretty interesting. And realistically, this yellow line should probably be down here. In any case, it's Michael Burry's biggest long holding. And with what I own in AT&T, which is possibly going to become a double position with some puts that I sold, and the starter position I have in Discovery, I sure hope he's right, because this is a big one for me. I really can see this doing the Disney and possibly the Netflix thing. That's how much money is out there for them. If you take a look at their reports, it's clear that they could just they could become a money printing machine. All right, what kind of questions? Yeah, so Michael Burry is also shorting ARK, and mainly because of Tesla. He's short Tesla and ARK. And if you'll see, I did talk about ARK here, and that Burry was shorting it. So we've got our ABC line, our ABC correction on ARK. Price near 60, I think, would be about as low as you can see it. I have some buy orders in at 82, so pretty interesting. All right, somebody asks about Ford. Where do you sell the puts? Well, so let's make a chart. You know, so I think that 9-ish, high as low as it goes. So if you get $2 for an $11 put or $1 for a $10 put, depending on whether or not you own it, I think that's all right. I'd probably say an $11 put, good till cancel for $2. You know, when things come down, they'll all come down. But if you can get a net price under 10, I think you're in good shape. So again, sell at 10 or 11, try to get a buck or two, try to get a net price around 9. Hold at the top. But I've showed you, I really think that Ford goes way higher than that near-term target. Get that fixed in place. So this is kind of my flexible line because we don't know that's the top, but it seems like it is. So now our fib retracements come in pretty clearly. So could Ford get down to the 6-7 range again? It could. I don't think so. But again, if you get a net price around 9, and look at that little plateau there for 6 months. I think you're pretty healthy. What am I looking at when I adjust the boxes? The fib levels. And the problem with fib levels is that to get the most current one, you have to kind of speculate on have you hit a top or not. Now, here's an interesting thing that I do. I could take this, go to that top there, and then speculate that it's going to come down to one of these levels. Speculate that it's going to go there. Look at that. That 168 line is right where 2618 line is, basically in the same spot. So that tells me these things are pretty often consistent. That's probably a pretty good price level. So good, I don't even want that one on the chart anymore. Now, even if this ends up being higher, it's still pretty close. If it does a 618 correction, which would be this orange line here, you know, 9-ish, then you get a triple up to 28. And that's if basically Ford's just Ford, what everybody thinks Ford is. But if Ford is what I think it is, you're looking way up here. Remember, I think of Ford as more of a fourth industrial revolution company that has a big runway not only on the EVs, but on all sorts of other industry. And they have a real estate empire that nobody thinks is worth anything. Well, if supply chains are moving back to America, which they are, what happens to all that real estate, right? Warehouses, logistics, all those types of real estate become pretty valuable. It wouldn't surprise me if certain mid-rise office buildings that have like a parking structure underneath, wouldn't surprise me to see some of those change the makeup of their business if they're having a hard time renting offices. They might become logistics hubs, right? How good would it be to convert a floor to cold storage and get rid of the parking and just make it a logistics center to do deliveries to downtowns? Those are the things I think about when I think about what should I buy for real estate. Right. I think at this point, all the pricing in of the bad news on SPACs is pretty much in or close to being in. I mean, it's all a question of dilution, which we talked about day one. It's how much do the warrants dilute you? Well, if you're in at the unit level, which I talked about at the front end, not so much. And now that some of these companies are no longer really SPACs anymore, they're just companies, you take a look and you say, okay, how is that business going to do? We have a couple of themes. Space is one of our themes. We don't need all those to become rocket ships. We just need one or two to take off. Interestingly, Sunrun is hiring up quite a bit. Somebody asked about Sunrun. So I speculated it would get down to there, and now it's double bottoming. So the question is does a rebound in the follow through all the way down here? Hard to know. I would wait, mainly because the RSI is not all the way oversold. Let it get down to at least about this level, 35-ish. Then go ahead and sell your puts. I'll put it on the list. The puts that I'm putting on the retirement income options are pretty much what I see that we can do this week. So when the week comes that we can do it, I'll throw it up there. But I would be targeting about, if you don't own it, I'd be probably targeting a $40 put, not selling it till the price was down at like 35. Then if you can get $2 or $3, you know, I would probably do it that way. I would think I would probably sell an in the money put when it gets low enough. Either that, I would just buy the stock. But the premiums are pretty fat, right? So that's something to keep an eye on. See if it breaks through this level here. Does it go below 41, 40, 41? I think it's probably going to. $4 for the November 40. Yeah, you know, maybe you can get 7 or 8 soon. Let's see what happens here. I mean, I know this is a big correction, but it's still, you know, pretty high, relatively speaking, compared to where it was just a year and a half ago. So let's see if it gets down in here. I think it might. Be patient. This correction probably just started. The Fed tapering is going to be a big deal. And there's so many millennials out there asking me, I mean, I had like 5 questions just today. Why did such and such go down 5 or 6 or 7%? Why is this? Why is that? And I just, normalcy, I don't think we're going to get all the way to a normal stock market again soon. However, at some point, there's more normalcy. And I don't think a lot of 30-something-year-old investors and 40-something-year-old investors even, but mainly 30-somethings or 20, you know, the younger crowd. People 5 and 10 years younger than me and younger. So 40-ish and younger. They have no idea what a real bear market looks like for the most part. In fact, many of them don't really know what real markets are. They've gambled so far, many of them, and they've won because the house is flashing the cards. At some point, the Fed says, hey, we have to do what? We have to protect the dollar. I do agree with you. I think that selling puts on growth stocks blows away dividend investing. I mean, it's not really even close. You're 30 and feel confused all the time. Yeah. Well, I think you're ahead in the game if that's what you're looking at. You know, I mean, the growth stocks, when you can buy them when they get oversold or sell the puts when they're down here, it's a good move. That's a professional move. Now, interestingly, MFI is still pretty strong. So that means there's underlying strength in this stock. Well, you may not want to wait too long, but you know, let's see if there's some blow-off days in the stock market through the end of summer and maybe into September, October. You know, let's see if tax increases mean anything to anybody. I don't think they're going to. Yeah, everybody wants to complain about, oh, they're going to raise taxes. You know what? If you ain't making $1 million, you're not going to notice. It's just the way it's going to work. You're not making $1 million, you're not going to notice. There's no income tax increases on anybody under 400,000. And at that level, you're not paying Social Security taxes anyway. So I don't think the taxes matter. I think it's going to keep us from destroying the dollar and still spending money. And, you know, I've talked about this before. This country is so rich. We're just so rich. I mean, you got to remember, we've been skimming the world for 50 years now. And before that, we had a huge growth run for 20. So since World War II, the United States has just gotten richer and richer and richer. First, because we didn't get bombed out in World War II, and then we helped rebuild the world. when all our soldiers came back and needed a house and needed a job. Then we got off the gold standard because the gold standard is stupid. Said, why would we want the gold standard? We're worth more than gold. Price it based on us. Price money based on us. Trade internationally. Do international trade using the dollar. Price oil in dollars. We have so much money here. It's off the charts. And one of the things I try to explain is, okay, if you had a house, because everybody talks about all the debt, right? They compare it to GDP. Let's look at this a couple of ways. If your income was $200,000 and you had $300,000 of debt, but it included a house and a couple cars, a little student loan debt. Let's say that 2/3 of it was the house. So realistically, that's an appreciating asset. Not as much as it had lately, but in general, it appreciates, at least with inflation, has been historically, houses go up with inflation, which is why real estate is a good store of value. And you say, okay, if I had a $200,000 income and I'm paying off a couple cars, does that really bother me? Well, that's what the United States is. The GDP of the United States and the debt are all the same. But wait, there's more. What if you had a $200,000 income, $300,000 of debt, but you had $30 million in assets? Now, would that $300,000 of debt bother you? The United States is worth no less than $300 trillion. No less than $300 trillion. And it's probably worth more than that by maybe double or triple. Hard to know. A lot of things held in dollars and a lot of things that aren't assigned a value in any particular market. The value of businesses, the value of real estate, the educational system has value that we don't assign a number to. There's so many things here that have tremendous financial value, but we don't tap any of it. It's not really plugged into the markets. We are so rich. It's unbelievable. All you gotta do is put your bucket out once in a while. Catch it, and then put that bucket somewhere where it won't evaporate. That's the way you should think about US debt. Dick Cheney said, debt doesn't matter. Why did he say that? But 40 years later, he's been proven to be right. It doesn't really matter unless we go berserk. If we go berserk, it's not going to matter. When you think about the dollar, think about, do you trust China? Do you trust Russia? Not as far as you can throw them, right? Do you trust Europe? Kinda. Intellectually, I trust them. Do I trust them not to fight with each other and do emotional, dumb things? Historically, you probably shouldn't. But they try to be good. And India is going to be a bigger deal than China in our lifetime. I don't know how long that's going to take, but I don't see us using the rupee in the next 50 years. So that comes down to cryptocurrency. And the reason why I've put off really diving into cryptocurrency is because there's a massive crash coming in Bitcoin. Unless the government plays nice. I just don't know the answer to that. Because there is no fundamental reason why Bitcoin has to be a thing. None, zero. Because once they digitize the dollar, the only thing that Bitcoin is a hedge on inflation. And wouldn't you rather have land? I would. If you really want to hedge for inflation because you're so rich that you need to, buy farms in 10 different countries that are close enough to cities that in your lifetime they'll be developed. Or actually, you're going to need them for the food. That's why I'm starting that sustainable real estate company. The best hedge on the future, and depending on what the regulations end up being, if I can get into Ethereum or whatever ends up being part of the validating digital contracts in the real estate industry, I'll do that. Just somebody will buy me. All I gotta do is get a little foothold in Wisconsin, and somebody will buy me when they want to expand here. And if I'm right about real estate values going up in Wisconsin because of climate change and water, double whammy, the good kind. Are there any other stocks though that you want to take a look at? You know, I gave the whole list of puts that I was selling. You know, I put orders in to sell. Only a couple of them triggered. Tomorrow's a big down day. I'd expect a couple more to trigger. Yeah, so let's talk about Vici while I'm looking this up. Vici, which means I conquered, basically owns the strip now, right? Vici bought the Venetian, which I told you was a great deal. And now they just bought MGM Growth Properties. And on the one hand, I like it as a real estate investor. I think it's probably just going to become a math equation now. There's not a lot of growth left for Vici in Las Vegas. And we have to see where else they go. Now, half of their real estate's not in Las Vegas. So we have to really consider the Vici portfolio and do the casinos that they lease to continue to make a ton of money. And I think with the advent of online gaming, they will be. So I think Vici is probably going to do really well as a REIT. However, I think what you really want to buy on the pullbacks are the actual casino companies. So if you take this from here to here, you know, what is that really? It's pretty good. It's, you know, 20 to 30, 50% gain. Can't measure it off of here. You got to measure it from here, right? IPO, bottom. So 20-ish to 30-ish. That's pretty good. It is. It's pretty good. And I would buy it under 30 probably. That's a little under 30 today. You know, I think that this chart's probably about right. 786 line if the correction gets big. 618 line if the correction's normal. At 236 is probably important. Yeah, I mean, it's almost a buy right now. I like to buy stuff cheap. I like that plateau right there. I like that it's a significant fib level, right? The fib levels I put on here are all the significant ones. You know, there's more, I don't put them on. So from 26-ish, 20-ish, I mean, I back up the truck at 20-ish. So the deal with MGM Growth Properties is accretive. It's going to allow them to buy back more shares and increase the dividend. And more importantly, I think than anything, is they become investment grade. That's a big deal. So Vici, it's in that, it would be a top 10 reach for me. But I really think we want to take a look at Caesars and MGM. I think if we can get those on pullbacks, we are going to need to. SunPower, yeah, already got that chart. So it's getting close. The 786 line, you know, if it gets down into the middle teens, you just got to go hold your nose and buy a ton of it. It looks like it's breaking through to the downside here. So I'd be real careful unless it gets some jitterbugs and then takes off. It could jitterbug a while. But if the market gets weak, it probably goes down here, middle teens. So you're right, nobody loves it. Running into the spots where there was big buying in the past. Yeah, I think there's not a lot of downside left. I really wouldn't have thought it would have broke down here. I think the market's wrong on this one. I think this one builds, and I think it's going to get some significant buyers. So when that hits the 13Fs, right, when that hits the hedge fund reports, there you go. At some point, somebody you've heard of is going to end up saying, hey, I own a big contract. Or they're going to get bought out. They have that going for them. Anything else? No, call it a night. Let you all go and have a good night, and I will get the rest of the charts done for tomorrow. Take it easy.